afternoon from London. So, taking a look across the European markets, we've seen another day of selling pressure, initially spurred on by concerns from the weekend of that European finance minister meeting in Poland, which raised greater uncertainty. So we saw selling pressure coming into the European Open and some pressure in the euro-dollar currency as well. Since then, we've had quite a few negative statements as well. We've seen a government source say that Italy are likely to cut their 2011 and 2012 growth forecasts. We've seen Troika say that they think that the Greek property tax is likely to yield €1 billion, not the €2 billion initially proposed. And we've seen a market talk of a negative think tank on Greece. Then we saw the ECB announce their bond buying under the Security Market Programme for last week, and they announced they spent €9.8 billion, and that's down from the previous week of €14 billion. So we saw a little bit of additional pressure in the euro currency there. Since then, we've seen Obama. He announced his deficit reduction plan. So he intends to cut spending by $4 trillion over the next decade, and that's in changes to Social Security and in changes to Medicare and Medicaid. Although there was a bit of a limited reaction in the markets. Today, however, we have seen WTI crude futures down over $3 on the session, and there has been a bit of strength in the dollar index amid that risk aversion and selling pressure that we've seen. But in terms of the rest of the session, there's not really anything on the calendar other than the Venizelos EU-IMF conference call, which the markets have been paying close attention to and have been looking out for. So apart from that, I mean, that's it from me at the moment, but enjoy the rest of the session.